Hey everyone, me Kevin here. In this video, I'm going to go through an overview of 4 stocks that I believe are still inexpensive, in my opinion, despite recent run-ups that we've seen over the last 2 weeks following September's crash in the overall market. Now, I'm not going to go into extreme detail on these companies, but I want to give you an overview of them and my price targets for them, and then guide you to some of my other videos on them, so that way you could see the more analytical stuff if you want. I will link all of those detailed videos down below. But first, let's go ahead and talk about the companies, right after mentioning that, hey, if you want 2 free stocks worth up to $1,600, Webull would love to give you 2 free stocks. Just deposit $100 with Webull and they will give you 2 free stocks and you get amazing extended hours. I mean, you could trade as early as 4 a.m. with this platform. It's amazing. All right, LMND. LMND is an insurance company that makes it extremely easy to chat with an artificial intelligence bot to get insurance for your home, as a renter, or for your pets. Now, it's not available yet in all states, but if this is a company that you're thinking of, okay, should I consider investing in LMND? Go to LMND.com. Try it. Their bots collect hundreds of times the data that most insurance companies are able to collect, and I'm very optimistic about their long-term outlook, though I have some concerns in the short term. Right now, they minimize their risk through something known as reinsurance. And this is something very common in the insurance business. It's kind of like getting an insurance policy for your insurance policies. And their goal is basically to have a steady profit margin. So that way, if they make $100, they keep 20. Something to that effect is their goal. And that way, all they have to do is focus on building the amount of clients they have, which LMND does very well. When they spend $1 on marketing, they get about $2 in revenue. And their last quarterly earnings report showed exactly that on steroids. They did very well in the last quarter. Now, LMND believes that they have over a 90% customer retention policy and also believes, as sort of the startup-ish that they are, if you can kind of call them like a startup of insurance, they also believe that in the future they'll be able to introduce more profitable insurance policies to basically continue to sell to their new clientele and build this sort of lifetime relationship with. I will tell you, out of all of the insurances that I've ever considered purchasing, LMND is by far the easiest. Well, right next to, of course, getting life insurance in as little as 5 minutes, which is a different company. I will link that down below. But I will say you can get life insurance very easily. But aside from life insurance, LMND for housing and pets and renters insurance, amazing. Again, go to LMND.com and just try them out. So my opinion is that this stock was a buy, like a small buy, under $65 after it IPO'd. And it was a heavier buy after it was under $60. And this is totally my opinion. It could continue to fall below that target. Anyway, I bought the stock on IPO day for about $54. And then the stock shot up to $95 within days, which I thought was insane. When LMND was in the 80s, I'm like, no, like they would have to 8x their revenue over the next few years for that to even remotely make sense. 80s was way too high. Well, fortunately for us stock buyers, the stock kind of fell right back down to normalcy, and the stock was trading for around $48 to $49 for a few weeks, and now it's around $57 per share, which is great because it's still under what I believe is a buy target of $60. Now, I do believe that the company will be worth much more in the future, but for now, I like buying them under 60. If they run up over 60, it's not for me anymore, but I will hold my shares. If they fall, I'll continue to nibble in and buy this company. Now, I'm going to link below a video where I talk in deep about LMND. But right now, the stock is trading for $57, and it's been trending up over the last weeks. Well, the entire market has kind of been trending up, despite some setbacks like our president getting COVID and some other things. But again, once the stock goes over 60, it's a hold for me. Keep this in mind, and this is more of a short-term issue. So if you're like a trader or something like this, keep in mind. In January, LMND will have a chunk of new shares that come up for sale. The same is true for Snowflake in November and December, so it's possible that there could be better buying opportunities for LMND in January. But for now, I'm optimistic for the long run, and I don't mind trickling in. Number 2. Purple. I made a video about Purple in detail on August 25th. I will link that video down below, so that way you can see the full detail analysis if you want, where I break out the spreadsheet on this. But yeah, I said that I bought over $60,000 of Purple while the stock was at $18 to $19 per share. Well, I got a ton of hate on that video, and people called me stupid and a moron and made fun of me. I got judged, and like, I don't even understand what happened in the comments, but anyway. I personally evaluated this company on its extremely inexpensive multiple compared to the rest of the insanely valued market that we have right now. Now, in fairness, it's a pillow and mattress company. It's not a tech company, even though they like to say they have technology in their manufacturing process, whatever, who doesn't? Well, since then, purple is up 47%. Now, it's at $26.64. At the time of this recording, of course. Now, I personally prefer buying this stock under $23, $24 per share, and I do believe that this is one stock that might cool off a bit and create some more buying opportunities. But every time someone pitches this stock on CNBC, it seems to run right up to $27 to $28, and then it falls back around $23 to $24. So it's quite possible we might see some of those cheaper buying opportunities again. But check my detailed video on this. To me, this is a holder. It's like a 2 to 3% of my portfolio, just like Lemonade and the other stocks that I'm going to talk about. I don't go like 50% on these. It's not like a Tesla. But these are good diversification stocks, in my opinion, to hold. And again, my opinion. If you lose money on them, it ain't my fault. I'm just some dude on YouTube. Now, a third company, Rocket Mortgage. Rocket Mortgage is attempting to streamline the mortgage business by basically having an assembly line of workers who do each different part of someone's loan for real estate, which initially sounds bad because you don't have that one relationship with someone as a customer, but honestly, they have a phenomenal app and they make it so easy for customers to directly connect their bank accounts to the company to simplify basically the entire mortgage application process and streamline everything. Then they keep the servicing rights, which means after people do a loan with Rocket Mortgage, people continue to make payments to Rocket Mortgage instead of that loan getting the servicing rights getting sold to someone else, and then you make your payments to someone else, which, if you didn't understand that, you might not own real estate yet, and that's fine. But what you need to know is when a company maintains the servicing rights, it's basically a free opportunity to continue to market to your individuals and say, by the way, did you know you could refinance and save money? And they keep getting more deals upon deals. Anyway, Rocket Mortgage is another IPO stock that I invested in. I believe that, just in my opinion, this stock should be worth at least $30 by 2022. This stock should heavily benefit from any decline in real estate interest rates. So as interest rates trend downwards during this decade, in my opinion, this is a stock to buy. Once we start seeing interest rates go up, I think Rocket Mortgage is going to have a little bit of a harder time, not only because they'll have less volume, but also the way they value their servicing rights is based on what interest rates are. For the time being, Rocket Mortgage is part of my portfolio. I enjoy buying shares of this company for under $23 per share. I purchased the stock more heavily around $18 to $19 per share, but under $23 is my buy-in target for this company. Just a heads up, this stock does not trade like a tech stock. It trades kind of more like some of the recovery stocks, though not exactly. And when those recovery stocks like the airlines, cruise lines, and restaurants trend down, so does Rocket Mortgage, which is weird. I don't know why. It's not a tech company, although they use a lot of tech. I guess that's kind of like purple. But anyway, I like them, especially since I track real estate like crazy. And so this is a natural one for me to invest in because I track the real estate market so much. I feel like I know the trajectory of where the real estate related industries might be heading as well. At least I have sort of that firsthand experience because I deal with it every single day as a real estate investor, which many of you know that I have an amazing course on real estate investing. We've got the sales course and the money course. We've got the stock course. All those things are linked down below, of course, with an amazing stimulus coupon code. Number 4. Chamath Palihapitiya last month announced a new SPAC, a special purpose acquisitions company, basically a blank check company where he intends to take the real estate home purchasing company, the iBuyer, Opendoor, public. But instead of investing in Opendoor, I actually increased my holdings in Opendoor's competitors. Zillow, a little bit, not so heavily, but more, Redfin. Redfin, folks, this is a company that will likely, in my opinion, come out from behind as a company that transforms the real estate industry. This stock is over 5x since I bought the company at $10 per share, which you could see my recommendation for that when I posted the video on March 18th, right as the pandemic was raging. 3 weeks ago, I posted an updated analysis on Redfin called My Thoughts on Redfin Stock. I'll link that video down below. In that video, I go through detailed my analysis on Redfin, and again, these will all be linked down below if you want more info on these. And one day after I posted my Redfin analysis saying, I really hope that in the future, Redfin can get to a 5% profit margin on their flips, which would make them very, very profitable, Chamath announced his Opendoor IPO, and in the documents for Opendoor's IPO, which is a competitor to Redfin in the same iBuyer space, Opendoor says we should be at a 5% profit margin within the next 2 years. And I'm like, that's what I was projecting. I'm like, good. I'm glad. That just sort of reaffirms what some of my expectations were, which is good. And it's helpful that I buy real estate, so I feel like I have some insight there. But again, these are just my opinions. I could be totally wrong about these. My target for Redfin is that Redfin could easily be a $95 stock within the next 3 to 4 years, though it could be higher, it could be less. It just depends on the market. Now, keep in mind, as usual, everything here, if you lose money, I'm sorry, don't trade based off what I'm telling you. Make your own conclusions. Go to the links down below. Watch the videos on Lemonade, Rocket Mortgage, the video on Purple, Redfin, Open Door. These are all the deep dive videos. This right here is kind of the more consolidation, pulling it all together video. So if you're looking for 4 to 5 different stocks that you might be interested in doing some more research on, this is sort of my outline for you. Hopefully you found this helpful. If you did, hey, share it with somebody you think might also find it helpful. Consider subscribing. Check out the Webull link down below. Deposit $100, get 2 free stocks worth up to $1,600. Get life insurance in as little as 5 minutes. Check out the programs down below. And folks, see you next time.